All right, hello everybody and welcome to another Learn It Live webinar. Tonight we're going to be talking about 3 scalping strategies and indicators for day trading. Always very exciting topic and popular topic. My name's Thomas Atkinson from FX Evolution. As always, I'm joined by Tyron Abella. How are you this week, Tyron?
Good, thanks, Thomas. Yeah, another exciting scalping webinar. We love the scalping webinars because every week we can do them and we can actually have new things to talk about, which is what makes them so, I guess, lucrative, because obviously there's scalping opportunities every single day. So I can't wait to jump into it and show you what we're seeing and what's happened over the last 24 hours or so and give you some tips and tricks on how to get into some of them.
Firstly, I'll just say hello to a few people. Hello, Simon. Hello, Malcolm. Hello, Sarah. Good to have you here. There's plenty of others as well. So hello to everybody. Risk warning for tonight, Ty. The information contained in this video / webinar is generic in nature and for educational purposes only. The information does not take into account your personal objectives, financial situation, or needs. This information is not to be construed as an offer, recommendation, or solicitation to buy or sell or participate in any particular trading strategy. So Ty, to start off with, obviously the Telegram groups who have been making a big deal about these during this current lockdown period. It's just because it's a good area for people to be able to get information. If you don't know what Telegram is, check that out. It's a messaging service. It's got some great groups. We have 2 groups. We'll pop them in the room now in terms of links. And the Pepperstone and FX Evolution chats, they really go hand in hand. So Pepperstone 1 lets you have a little bit of snippet of all this daily information about the Forex markets and general stock markets, and the FX Evolution public chats where you can share your own trade ideas and talk to other traders. So today we'll be covering live chart analysis, what most people are probably here for, of major Forex pairs. So we'll take a look at some other different pairs today and see how they're setting up. We're looking and talking about day trading setups on smaller timeframes, how to identify stop loss and take profit levels, and of course live Q&A with our team. So ask questions if you have them along the way. I believe we do have sound, so if anyone is not having sound, it could be the web platform. Just be a bit careful about that. But make sure you ask questions. So we already have a question here, and it's from Malcolm, and he says, your thoughts on pivot points when scalping. Pivot points are fine as long as you use generally the daily and under. So use the daily pivot points, and then you bring that down to 15-minute, 1 hour, 4 hour. That's probably where I would stick to it. Obviously R1, R2s and S1, S2s, they do work, but I think it's like anything. You want to have multiple reasons to be in a trade. By themselves, pivot points will not be enough. So right now, look out for news events. In particular, I will draw this on the chart, this one here, okay? If you do not know why this is the most important and possibly terrifying bit of news of the week, then you probably need to pay a little bit more attention to the markets. But basically, you need an economic calendar right now. Any news from federal chairmen, from reserve banks, from anything, any press conferences with these kind of people talking, they're moving the markets. This happened during the GFC. It will happen now. We are seeing all sorts of fiscal stimulus, all sorts of economic changes every day. So make sure you're aware of your current currency or current commodity or current stock market index. It doesn't really matter what you're looking at and who is talking, because if you don't know, let's say about Fed Chair Powell speaking, and you're in a scalp and you're on the 15-minute time frame, you can get absolutely destroyed very quickly. So you must be very careful with that. Just a word of warning. So make sure you have an economic calendar. So which pairs are best to start with when it comes to day trading? We had this slide up last week. I pretty much stick with this most of the time. So look, with gold, I think any of the major gold crosses are fine. They're all good for day trading. They all present different opportunities. Don't just stick to gold versus US dollar. Think about gold versus odd, gold versus euro, because sometimes you're going to see gold, US dollar setting up really well. You're going to know that euro is weak, let's say, versus the US dollar, and then you're going to think, wow, well, if gold's strong versus US dollar and euro is weak versus US dollar, gold could be even stronger versus the euro, and that creates an even better opportunity. So do think about that cross-working your analysis, multi-time frames, that kind of thing. It all comes together when you think about many reasons that make sense. Majors, Tyrone, we are big fans, of course, of the majors. Some people argue these are harder to scalp. I don't necessarily agree with them on that. I think the thing is though, you pick the particular pairs for the time frame that you're trading. So if you're scalping or day trading an Asian session, pound odd could be a very good cross pair, as well as US dollar yen, as well as odd US dollar. You pick the currencies that are going to be moving more during that session. We'll talk about that more in this webinar. So Ty, what are your thoughts on these pairs? They're all pretty good, aren't they?
Yeah, definitely, and especially when you can time them to the market that you're trading. I mean, it is a big difference. Like, you're still going to get, look, there's enough liquidity in the markets, especially in a scalping environment where, you know, the Euro USD and the Pound USD are still going to move in an Asian market, but they're not going to have anywhere near the movement and the power as they would obviously in the London and the New York sessions. But you know, for that part, a lot of the Aussie-based pairs, like I said, although they are crosses, you can still often get your moves that you're looking for, especially in this market environment that we're in now, where scalping is definitely the most important and probably the most riskless, I guess, trading strategies. If you're going for longer term trends at the moment, you're going to be finding yourself chopped up because really nothing is moving in big giant waves. So scalping is definitely at the fore at the moment. So regardless of what market you're trading, whether it's Asian, London, or New York, if you can time your cross pairs or even your majors in those timeframes that correlate, you're going to get good moves.
That's right, Ty. And we always recommend, if you're someone that wants to scalp or trade sessions, come in around 30 minutes to 1 hour before the session opens. Incredibly important timing. What you'll notice is that sometimes there's a massive movement of money coming into a certain currency in the first hour. And actually, a lot of the setups happen just before the market opens. So resistance might be broken just before the open, or support might be broken just before the open, or your daily pivot, or your stochastics at the oversold, or there's a pin bar or hammer as we call them, anything like that. It happens just before sometimes. So make sure you get in just before, 30 minutes to 1 hour. Let's say if you're trading the pound US dollar coming into the London session, and then you trade it for usually the first hour to 2 hours, and then it will, generally speaking, the market will die down and it will go into its normal kind of rhythm. This happens in stock markets as well. If you look at the first hour, hour and a half, maybe into 2 hours up to lunchtime, so say in Australia 10 o'clock till 12 o'clock, that will be the best, I guess, action time. And then in the afternoon, you'll see usually a bit of pickup from around 2 o'clock to 4 o'clock close. So there are times of day, and particular instruments will trade better during times of day. Now, anyone that's been coming to our webinars for a while will know we love the top-down approach, and I mean love the top-down approach. It's the biggest difference when it comes to trading. If you currently scalp and you're in a 1 minute, 5 minute time frame, and you're not looking at the bigger time frames, I implore you, look at the bigger time frames and think about everything you do from a money flow perspective, because it's really important when you're scalping or day trading to know what the bigger money is doing and not to fight the system. You have to go with the system. Anyone that's been looking at the stock market recently will know that the S&P 500 continues to go up, Ty, and the reason it continues to go up is because the Federal Reserve and to a degree Congress basically just printing cash, and they're producing all sorts of stimulus that are having beneficial results on the stock market. Now, if you're shorting the stock market, you're sad right now because you can't stop it right now. Eventually, maybe it'll do something, but it's hard to fight these external forces. So you must be aware of the trend. The price action really is telling you pretty much just buy until it breaks. So even though logic might not say that, it's difficult to fight the trend.
And it actually brings up a really good example, actually, of what we're talking about. Like in terms of trading with the bigger time frame, shorting. Yeah, so many people are getting caught out on the shorts on the S&P 500 at the moment because everybody's trying to, preempt when it's going to turn. Everybody just wants it to go to 2200,
Well, they do.
and everyone's trying to short it. But the scalp long is so much easier because the power is going up, and although no one really believes that it should be up there, and no one really believes that it should be going higher, except I don't know who believes it, but for the most part, the majority of the sentiment is definitely for the short. it's the long scalps that are actually working out so much easier than the shorts, because every time it pulls back, you can get a really quick and sharp move up because the power of the market is pushing it up. So if you can identify the moves on the bigger time frames and trade in that direction, even though you're scalping, it will make your world a hell of a lot easier.
So this is actually the chart that we use all the time to talk about peaks and troughs, or higher highs and higher lows. Now, there is a difference, but we'll just talk about it from making a trend. So say this was the S&P 500 right now, or any currency pair. Basically, the trend is currently up, and this could be, let's say, a 15-minute time frame. So if you're seeing this on a 15-minute time frame, and you're fighting this in your scalps, and every time you're saying, okay, I'm going to sell it here, I'm going to sell it here, I'm going to sell it here, it's easier to go with the trend. So the first thing to get out of this video, if you're currently a counter trender, look, I understand some people probably have success with it, but you're making it way harder on yourself. Following the trend and is the easier method long term. There's a reason why trend is your friend. When I first started trading, I fought the trend. That's all I did. I was like, yeah, I'm going to buy at the cheapest price and sell the most expensive price, and then get in at the top and get out the bottom, that kind of concept. You're better off just following the flow. So that's my opinion. Obviously, you can do what you would like to, but I think it is important. Someone mentioned before that they trade the 5-minute time frame only. So this is from Peter. What recommendations would you have for someone that trades 5 minutes? Well, I'd recommend you look at the 15-minute, you look at the 1 hour, and potentially even look at the 4-hour or daily close, just to have an idea of direction. And we'll talk about that in a minute. But yeah, 15-minute, 1 hour, absolutely, you should be aware of what's happening there. So types of strategies for day traders. Well, obviously there's the channel breakout strategy, or a strategy where you've recognized a range bound market on some smaller time frame, it's broken out and you get involved. The other one is, of course, channel market stochastic MACD divergence, a very popular and very decent trading strategy on any of the time frames, where you recognize a market that's trapped and you trade using stochastic and MACD, potentially divergence in between it. And then probably the one that I think is still the easiest, which would be something like you recognize a trend and then you use moving averages and role reversal to help you get into those trades. So a channeling market, we're going to assume most people have an idea of what a channeling market is. It's basically just a range-bound market between a price. This could be any time frame. It could be a 5-minute, could be a 15-minute, could be a 1 hour. It doesn't really matter. The main thing is that price is trapped. Now, if price breaks out of this trap, what do you think is going to be happening? Well, of course, this, let's say, we'll call this London. Excuse my terrible drawing here with the mouse, but basically this is London. We come in pre-London open, we see the market here. Now, London's well known for snapping what we would call fake outs, but let's say the one hour breaks above. So we see the 1 hour break above the range and it closes. So we've got a candle here and the candle's closed like this. What we can then do is we can then look for potentially the role reversal, where the market comes back down, it tests the previous resistances, and that becomes support, and then we buy it here on our smaller time frames, our 5-minute, 15-minute, and take it long. And the great thing about a channel, Tyrone, is that we already have the distance that it should go. So in terms of the distance, it should be the range, and the range should complete again. And the idea is that you would want to take around 70 to 80% of your expectation here. So you take around 70 to 80% of your expectation with the channel, and that's just excellent, because when you think about it, this type of movement is quite likely to occur. But the beauty of a channel breakout and you scalping it is that you can take it even further. You could say, okay, well, why it's broken out, I'm on the smaller time frames here, and I know that this is usually the distance it will go. But a channel generally breaking out, especially if this was in the direction of trend, so let's say we had a market coming up into this, well, guess what? It might go way further than this. So you might take maybe 70% of your order off at this level and leave the rest on to appreciate to the next higher time frame, take profit or stop loss. So an amazing kind of strategy that you're starting to break down, and you're thinking, wow, we've got multiple ways of trading this. We trade it like a normal scalp or day trade, and then we take it in for the longer term. So let's say the 1 or 2 day hold, we can take a certain percentage for. And that is how you build a higher kind of risk reward beneficial trade. So 3 indicators worth using is moving averages, MACD, stochastic. And I think you would agree, Ty, these are 3 very key, very decent indicators. And many people use them, but it's one of our favorite, isn't it?
Yeah, definitely, because they're the ones that seem to be the most market adaptive. And also, in terms of stochastics, moving averages, and MACD for that matter, the good thing about MACD is it actually works in sideways and trending markets. But stochastics really come to the fore in sideways markets. And yeah, sideways markets are often the best scalping opportunities because you've got very clearly defined entry points, take profit zones, and stop losses. And I think probably the best way to scalp effectively is to actually have your predetermined zones very, very obvious, and that makes scalping a lot easier. And that's where stochastics can really come into it and help you out, especially when you're talking about channels like we just saw.
Yeah, so Ty, another one is double bottoms. We'll move into this double bottoms and double tops, and we'll move into this more in the markets because obviously we said get in there. Role reversal, something important. We've done plenty of webinars on this. You should go and check them out, or otherwise learn about role reversal through our course or something else, because role reversal is so amazing. You've got to do this. Like, you've got to understand it, because
one of the most important concepts, no question about that. Yeah.
It's the best. It works on everything. It's great. I got some questions here. I'm just going to answer quickly, Ty. Peter says, how do you take partials? Certain software will let you do it. I believe the advanced trading tools, the ones that Pepperstone can offer people with live accounts, they, I think, have the ability to take partials off. So that would be quite good. And why do we use stochastic over RSI? Ty, do you want to answer that one?
Yeah, sure. We find that the stochastics is actually more responsive to what we're looking for in terms of scalping between channels. RSI has its place, there's no question about that, but we find that it's not as fast and not as responsive to what we're trying to achieve. So, and that's why, and it is very, very popular among scalpers. So the overbought and oversold zones are obviously very, very clear. And I think what you get from them as well is it's a very, very clear entry point where RSI can be a little bit, it can sit in their zone. RSI can sit in the zone a little bit longer than the stochastic can, and sometimes that can make you miss a scalp. So I think in a scalping environment, especially in a sideways market, stochastic is a little bit more responsive.
So don't FOMO. Of course, if you're a day trader or a scalper, you need to have amazing psychology. You need to absolutely be on your peak performance all the time. If you ever fall off the peak performance, you need to leave the charts. And I'm not kidding. I'm sure most people out there have made a bad mistake one night, and that we're no different. We've done it. Everybody does it. But the key is to how you pick yourself back up and how you stop yourself from making those types of things. So try not to have a fear of missing out, because on a 5-minute, 15-minute, 1-hour time frame, doesn't matter what it is, you could potentially fall into the trap of taking a bad trade and then just continuously taking bad trades throughout that night and going through all of these emotions. And I always show this because it is important right now. So Ty, let's actually take a look at the markets right now and talk about things that are happening and things that are why it's worthwhile checking out, let's say, multi-timeframe analysis before you look at scalps. So I'm going to start with gold. And here is the gold. Well, I should go gold monthly. So we can see gold is in a pretty damn big bull trend in terms of its current movements. It's heading up to previous resistance, and I've got a bunch of lines here on my chart from support resistance perspective. This was a very key point, this 1373, and that really started the trigger of bullish movement. We moved down to a weekly, moved down to a daily, and then we start to see something with this daily. And I think this is where you want to start looking at things, even if you're a 5-minute trader, and you want to start saying, okay, well, this is the key level, this 1728. The market was trapped a little bit before it moved up, and then it moved up, and then the next move, if I say miss the move up for whatever reason, is that the market will generally come back down and it will do role reversal. So it will test the area. So then what we can do as a scalper or a smaller trader is we can come into the smaller timeframes and we can start to draw up ranges. So let's say we trap the market and we say within these ranges here, 1728, 1735, we are looking for buys. Okay, we are looking for buys. We've got our range. We then set our alert for when that happens, and we just look for buys. Now I can see a very nice bullish hammer here that I'm sure some people that took on the 4-hour, but we may not be interested in that, being these shorter time frame traders. So then we go into the charts and we see here, well, I like this after especially the price action that's happened, 2 bullish hammers coming off where the market has found a base, and I'll just quickly show you. So where the market's found the base, and then you've got these 2 bullish hammers going into a break, retest, all these types of things. So this is on the 1 hour now. So we're on pretty much day trading time frame. This is day trading time frame. 1 hour can certainly be so. So this is the kind of zone that we want to be targeting. And when we target that zone, we then go into the smaller time frames and we start to look for opportunity. And that can come in all sorts of different things. There's a bullish hammer in the direction that we're looking for. Maybe that was our only 15-minute trade we saw, but we've got a bullish hammer going into the direction. We could also say when it made a new higher high, which happened here, and it broke through this point here, we're looking for bullish trades. We've got quite a lot of price action coming off this point, and then all sorts of things start to play together. So the power of going from the daily down to the 4 hour, down to the 1 hour, I actually saw 2 decent trades in that opportunity within our zone. So that's how I would like to break down most trades. And then what you want to do after this point is bring in your stochastics, bring in your MACDs, start to think, well, is there something else that we're not looking at here? So let's say MACD. Well, one thing that's very clear to me, Tyrone, is that we've got strong MACD divergence here on the 15-minute chart, very strong MACD divergence, where basically, and of course it makes sense to happen. This is always going to be the way when you've got a big sell-off coming with a second sell-off. But this, with a bullish engulf, starts to present a picture that we might be interested in trading this. What do you think?
Most definitely, and I think that really exposes the power of MACD. But I'm gonna ask or answer a very quick question, because I know I've had about 50 questions come in about stochastics and RSI and why. I'm just going to quickly go into a bit of an explanation. The reason why stochastic seems to work better for scalping than RSI, why it's our preferred method, is because it basically compares the closing prices of the currency pairs to the previous closing prices. So the 14 days is the general setting. Now, a lot of people are asking what setting is the best. We find that the standard MT4, MT5 settings that everybody else uses are the ones that we stick to. There's no need to change those. People can play around with them to get, potentially maybe a little bit sharper, but it's a 14-day period that really, it's comparing the closing prices for the last 14 days. So what that does is it's very, very reactive to what price is doing. So I think it makes it more reactive than the RSI. It's not that it's actually any better. It's just a little bit more reactive, and that's why we like it for scalping more. But if you do like RSI, there's nothing wrong with it. Don't take us wrong. It is one of our preferred indicators that we actually do choose, and we've only got about 5 or 6 of them. But for what we're talking about at the moment, yes, stochastic seems to work better for us. But there's nothing wrong with RSI.
No, there really isn't. So somebody just asked, how do you pick a zone like this? I'd probably recommend go and have a quick look and rewatch this section, the section before this. But the key is to recognize on the larger time frames points of resistance breaks that will then become support breaks, and then target those areas on the smaller time frames. So the next one I'm going to show is just the euro pound. Okay, and the euro pound is, I've been actually relatively bullish, but it's hit an area, and we talked about this last week. I think it was literally in this webinar as well. Like, we can go back and have a look at it. We talked about the bullish side of euro pound, but now all of a sudden euro pound has hit resistance and it is in a bit of a channel. So it's in a bit of a stuck zone. We've got multiple resistance tests, and then we've got some support tests down here. And this is a nice little buy off support test, nice little bullish hammer again off the support. Now remember, a bullish hammer or pin bar or whatever you want to call it, basically is not good enough by itself. But off a key level of support or a key level of resistance, it can be quite strong. Another thing that I always point out, Tyrone, in these videos is that the market doesn't quite make the top of the resistance. Notice how there's a little bit just before it gets there. And this is why we always talk about that 80%, like 70 to 80% take the easy money, leave the hard money on the table, because the market knows this and people will take money earlier. So they'll actually get out of the trade. So in the range here, we've got all these sorts of things. This is where, when you recognize this type of range, you can bring in your stochastic. So you can have your oversold stochastic up here and your oversold down here, and you're overbought up here, and then you can effectively trade off that within there. So you might show a hammer coming off the zone, you've got an oversold stochastic, and then you're looking at it going up, and you see this hammer and you say, okay, we've got support, we've got the stochastic, we have the price action in terms of what's happening, so we're going to be in the trade. You've got 3 main reasons to be in the trade, and if you ever have less than 3 reasons to be in a trade, I don't think it's worth taking. I mean, Ty, would you agree with that? 3 at least.
Yeah, absolutely. Yeah, absolutely. And that goes for scalping. Just because it's scalping, it doesn't mean that you don't need confirmation. And we probably can't stress that enough, really, because I mean, a lot of people say, well, confirmation isn't as important when you're scalping, but I beg to differ on that one. Like if you're not actually looking for the confirmation and getting those touches in those key zones, then you are really sort of playing into the hands of being eaten up by just the market movement or market volatility. You still want confirmation. It's just that you need to be a little bit quicker and sharper on what you're looking for. Now, that doesn't mean you're looking for a daily close or anything silly like that. Obviously, if you're going on a 5-minute scalping chart, but the confirmation we're talking about are things like, as we can see, you can highlight here, stochastic moving into the overbought or oversold zones, crossing over and crossing up. That's confirmation enough. 3 touches, 2 touches in a role reversal area, that sort of thing is what we're talking about. So it's all relative to the chart that you're trading, okay? So you're not looking for big daily confirmations on scalping, obviously, but you are looking for the small confirmations on the time frames that you are paying the most attention to. So just quickly too, I'm going to touch on another thing that I've had about 40 questions on, so I'll answer it in one hit. The webinar is definitely being recorded, and it will be available on YouTube tomorrow on the Pepperstone YouTube channel, as are all our previous webinars. So if you've missed any in the past, and or even want to go back and retrack some of the things that we've talked about, they're all available on the Pepperstone YouTube channel. So check it out tomorrow. This one will be available in the morning, and all the previous ones are already there.
So yes, I wanted to bring the stochastic up. I knew it would show like this, but I'm going to maybe say your name wrong. Adeliza, I think, maybe. Basically, I said, can you put the stochastic on? So you've got these overbought, oversold areas. You can see the crosses. The cross correlates with also this particular hammer. This is a great little buy. I think that's a very, very solid area. And it would always be a solid area. You could use the same strategy all the time. The other thing that's beautiful about it is notice the prevailing trend. The prevailing trend is up. So when you're doing this and you've got this and you've got the channel and all these types of things happening, you are trading with trend, and trading with trend is your friend. So really, if you said, okay, I'm never going to do all these sell downs, all I'm going to do is buys, and the over prevailing trend is up, you'll actually see more success. It will give you percentage better success, like literally percentage points better success. So trend, very key. This is just the channel type of strategy, but again, still pays attention to the bigger time frames. And I think 1 hour is still fair for potentially even scalps. You can still be in and out within an hour or 2 hours. And I know some people say scalp 5 minutes, you're in and out, but realistically, it all blurs together in the end. Here is the odd New Zealand 1 hour. I just wanted to show this key level of support is broken. When that key level of support is broken, potentially all you do is you target an area. So you target a zone for your start of day scalping, and then you say, okay, well, I know this was key support, so maybe it could become role reversal, and I'm going to get on to the smaller time frames. This is 1 hour, go into the 15-minute or whatever, and I'm going to then look at this zone and look for potentially change of trends. So maybe what I do is I say, okay, I want the market to come back up to this point, and then it does something like this. We've got our high, our low, our lower high, and it breaks through. Direction of the trend is down. We know this is a key area, and then we target it on the smaller time frames. It can be a 5-minute chart. I don't really care, but the point is that you're targeting key areas based on multiple reasons. So that's something else that you would like and want to do when it comes to the market. Can you use these same kind of concepts on the indices? Yes, but not the S&P 500.
at the moment.
At the
Actually,
moment.
can we just go back to the hour Aussie New Zealand? I just probably want to highlight something on that one, because a lot of people say, yeah, what do you do? How do you trade it? Because I know people get very confused as to, it's easy for us to sort of talk and move a little bit quickly, but just on this one, yeah, you can see that the prices are moving down quite often. We talk about it a lot. The 20 moving average is obviously one of the pullbacks that we love, and it makes no in a shorting environment on a scalping sort of scale. It's fantastic. Now, as you can see, prices come up. It's getting stuck on the moving average 200 there. You can see if price is still here when that 20 moving average catches up, and we get a crossover of the 20 moving average and the 200. So, you know, it only has to hang here for another hour or two. And that's very possible. Look, let's not forget, this is the Aussie New Zealand in a London session. So, you know, it's not going to be as active as it is during the European sessions, during the Asian session, sorry. But if it sort of hangs here and then that 20 moves down, that could provide a really, really good opportunity to actually take that short from there and continue on the way down. You can see we've got a lot of clear space underneath it. And the next clear zone for this to hit is, we'll mark it up for you if you like, right across there, okay? So that's what we're looking for now. So just to give you a bit of an idea of how you can preempt a trade, we're waiting for the 20 moving average to come down. The 200's holding it at bay at the moment. We want the 20 to come down a little bit further. And if this is on an hour, if we get a smaller time frame change of trend, like a 15-minute series of lower highs or lower lows, or even on a 5-minute in this instance, I would be pretty happy with that. And we've got a very clear target. Okay, that's what we see scalping as. Is it a setup? Yes. Are we waiting for confirmation, which is highlighting my point? Absolutely, but it's still a scalp.
Certainly is, Ty. So yeah, it's about bringing that together. I've got two good questions here I'm going to answer because they're relevant for everybody. So the first one is, what is your opinion of, let's say the other day where there was, I think it was like a big scalp during a big spike during a 15-minute on probably New Zealand or something, when they were talking about interest rates. What do you do on the 15-minute time frame? I actually tend to think that is not worthwhile trading. Now, I know there's a lot of pips to be made during news events. The problem is how much price is being packed in, how much has already been packed into the news event. That's more of a fundamental question. I think it's very tough actually to figure out how much is in there. So what I like to do is I like to wait until you have kind of the aftermath has occurred. So usually this is what happens actually. The market goes up like this, and it's a good learning curve for everybody here. And then it does this kind of thing. And it basically becomes range bound. And it will always usually do this. And this is a 1 hour. There's actually a lot of scalping opportunities in this, because then we can maybe we've got the bias towards the upside based on the news, and we just look at all these levels on the smaller time frames, 5-minute, 15-minute, and we buy. We just buy all the levels in here based on our other systems on the smaller time frames. Then when it breaks through this point, I think it's very fair to start taking longs, because that's not necessarily due to the news anymore. It's just packing in further price and moving to the next area. So I think the way to answer that question would be, would I be involved in this thing here? No. Would I be involved in this thing here and this thing here? Sure. I just think that's a little bit difficult when trading the news, and I think trading news and scalping can be very dangerous. I've done it, but you know, it's varying results. I mean, that's what we did when we first started.
It's certainly not. It's not ideal. Not if you want to stay in it long term. That's
quantitative easing. Oh my god, bad name.
Absolutely. I've got another lot of questions that are coming through. Can we analyze particular pairs? Because this is a teaching scalping webinar, we're going to only try and focus on the ones that are going to make the most sense for scalping. But if you want to do more market analysis or ask us questions about that, our webinar starts in 25 minutes. Free to attend. I'll pop the link in the window. So anybody who'd like to join our webinar, we can take trade requests to check out on that one, and we do a full market analysis in 25 minutes. So I'll just pop that in the room now.
So here's the US dollar CAD time. I'm just going to, actually I'll go to a daily first. So we can see the dailies, you know, got big strong support here, pretty okay resistance in terms of up in this zone here, and we're stuck in this range coming down to the bottom. Now, if you're not aware that this one kind of 38,774 is key support on the daily, that's bad as a scalper. So you must go in and then you start breaking it down. What are we seeing here? A bit of a sell-off. We've got this nice little rejection candle here off the previous highs. Go down to the 1 hour. Oh, that's interesting. Close below what looks like, you know, not the perfect double top, because we want the resistances to be the same, but it certainly has closed below. We then target the 30-minute, target the 15-minute, target the 5-minute, and start to look for potential opportunities in the direction of trend. So this is the type of thing that you want to do. You want to break it down, and then you want to start targeting this area. And one of my favorite targets is to use price action on the smaller time frame. So that might be something where you've got a high, a low, a lower high kind of swing, and then it does that again, maybe it makes a new low, and then you target maybe the area down into previous support. So that, or target the area into here, which is probably more this distance from the larger time frame. So these are the types of things that you want to break down. You want to basically say, okay, is it strong enough? Now, I'm not saying this one is that strong enough. Remember, you need 3 or more reasons to be in something, but it's that concept that you want to start applying. And I think that's quite important. So chart patterns. Tyrone, can you pop in the room our chart pattern? We have a free chart pattern cheat sheet. I think it is important for scalpers or day traders or swing traders or anything. Arguably, it's best for swing traders, but it's very key for everybody. And I would say these patterns, probably ignoring the flag pattern right now, are very good in all markets. So the double bottom, double top, the ascending, descending triangle, the inverse head and shoulders / head and shoulders, and of course, the channel. They're the patterns that you want to know. There are so many patterns out there. There's teacups, there is all sorts of things, but realistically, if a pattern doesn't make strong psychological sense, as in the market psychology, I wouldn't even bother with it. It has to make sense. If things don't make sense in trading, in my opinion, they're no good.
Yeah,
because
right. Yeah.
really humans are trading it. Yes, okay, as algorithms that have been trading the markets for tens of years now, but they're coded by humans with some kind of mathematics behind them. So I like things that make sense.
Yeah, and the thing is too, when price makes sense and is part of the pattern, you're going to have, we're not saying that, there's a lot of patterns out there that we don't actually use that work. We're not saying the patterns don't actually, work when they're used correctly, but what we've isolated are the ones that we know work well. And work well with our market analysis. And I think that's what's important. And that comes to whatever you're using, as long as you understand what you're using and why it does what it does, it's irrelevant what it's called or who uses or who says it's good. There's no right or wrong in the market, but there is a right way and a wrong way to apply it. And the most important thing is to actually understand what it is you're doing, why it is you're trading it. We know why we're trading a head and shoulders, or why we're trading a double top, or why we're trading divergence. There's a very good reason for it, and the market analysis is telling us that. So as long as we understand that, then it'll make you far more successful.
So basically, I just got a question here from Kityo, I believe, which is how do you best tell when end of a retracement happens, Ty? And that's a good question. I think with retracements, what you're looking for is you're looking for changes of trend on the smaller timeframes. So basically, if you have a retracement on the 1 hour and then you have a change of trend on the 15-minute or smaller time frame, that's pretty much the end potentially of that. There is all sorts of patterns, swing trading methods, and other things we've done in the webinars, so you can definitely check that out. Market conditions to look for right now, just quickly go through them. Non-farm payrolls is not as important right now, but definitely any economic news, and of course reserve or Fed or bank or reserve bank or anyone in talking, that's very, very important. Of course, join the Telegram groups. I would say as well, you need to have sound risk management strategies. So things like 1 to 2% of capital, and make sure that your strategy always is rewarding you over 1-to-1. If you risk $100 and you're not making $100 back, you probably, and that's not consistent in terms of you're always taking $50 or $30, it's too difficult. Okay, long term, you need to have trades that are risk and reward is very, very similar, and that's because then you just need a 50% or better system. If you taking less, usually that means that you're not fulfilling your trade plan. Okay, and planning is essential for all of these things. So we do have a lockdown special at the moment, Tyrone. If people are interested in finding out more about the indicators that we use, the price action that we use, the strategies that we use, and you can use them on any time frame, then we do actually have a $50 per month. We understand that it's some people, you know, it's a bit tight right now, but we do like to give people a pretty good education on what to do based on our previous experience and based on what we know works well in the market. So definitely check that out. We'll put the link in the room, and I'll answer a couple other questions as well, Ty, while you do that if possible. So we do definitely have this. Zednek asks, will I be moving the market trading, you know, some bigger lot of contracts? You won't be moving the market. You cannot move the currency market yourself, and you never really need to be worried about your general volume. So things like 10 contracts or 20 contracts or 100 contracts, they're just not that big in the scheme of the overall market. So just remember that it is really important. Can the scalping strategy be programmed into automated trading systems? Okay, so that's a big question. Can you automate any indicator? Yeah, pretty much. You can audit because they're all mathematics and they're all indicators. Can you automate price action easily? No. It's part of the reason why it works so well. But you can, I mean, look, somebody probably could do some of it, but realistically, price action is kind of like the lead indicator because it is showing you what's happening now and then. And more importantly, it is the human psychology of the market. When a level breaks, you'll notice that pre-London or pre a big news event, a resistance or a support will be gravitated to, and then during that news event or during that open, that level will be broken. That's money flow, that's human psychology. Then it goes the distance of the channels, distance of the patterns. Why does that happen? Well, again, human psychology, it's the self-fulfilling prophecy. So you want to have a price-based system for everything that you're doing, Tyrone, and that is that you have some kind of business plan. Now, obviously, the Presic business plan is the kind of one that we have in our course, but this should be applied to anybody. And I'll just stress it, have multiple reasons. Have maybe a price action-based reason, have a risk management-based reason. We obviously have the ELD, which is like multi-time frame kind of concept. Chart patterns, indicators, charting techniques. We've talked about a couple of indicators. Educate yourself on those indicators. If you want to bring in other things, sure, but you still should have multiple reasons. Any thoughts on ATR? Yeah, you definitely can.
ATR does work, but it's not something that we use because we have ATR can be often used as a bit of a stop loss or a trailing stop loss, and that's fine. It's certainly not going to talk badly against it. It can work, but we don't use it as part of our strategy because we use a different form of trailing a stop loss down, which is more a manual based one, you know, based on market movement rather than just numbers. So yeah, we explain that more in the courses, but yeah, it's not one that we use, but it does work.
I'm going to use this 4-hour chart just for the next question because I did say I'd show take profit and stop loss areas, Tyrone. So best stop loss is market adaptive, no fixed pips or anything like that. Big mistake that most scalpers make. So let's call this 5-minute chart, okay? So we're on a 5-minute chart. If we have a series of, let's say, swings, when this swing is broken, we can definitely, let's say our stop loss was down here for some reason, then we move it up to here. New resistance with a swing, move it to here. Comes down, doesn't make a new high yet. We're still here, makes a new high. We start moving behind the next one. And then if this made a new high here, we just move it above here. So basically you're doing price action based stop losses. That is key. You can also use moving averages. We've talked about those in the webinars. Again, check it out, check out our course, whatever you want to do. And then you can see more. But moving averages, market adaptive stuff, price action based stop losses, very key. Percentage for everything that you're doing. In terms of take profits, key is support resistance. If you're finding key support resistance, Tyrone mentioned before on this odd New Zealand, that if it came down here, this would be the next level. Well, guess what? If you're in shorts and you're at this level here, you probably should consider taking some money off the table or consider the idea of risk management and all sorts of things in your system, because this is a key level that you expect the market to go to. Part of the reason we always talk about patterns, Ty, is because they're self-fulfilling prophecies. They give you great take profit levels, plus they also give you fixed stop levels based on the pattern, and that's market adaptive. So very, very cool. What's the difference between Do we also provide an advanced course? Yeah, we certainly do. But both go hand in hand. People think that they know everything, and I know we did. There's nuances to everything, which change everything that you do. What's the difference between US 30, S&P 500, NAS 100? Are they all the same? No, they're totally not different. So US 30 is top 30 companies by market cap size. S&P 500 is the top 500 companies by market cap size, and the NASDAQ is the top 100 companies on the NASDAQ by market cap size. They're all different. In terms of scalping them and things like that, you definitely can. It's not a normal market right now. You have the Fed, so you'll need to read up about the Federal Reserve to find out more on that one. But yeah, it's not a normal market. Do you use trailing stop? No, we won't use trailing stop, but moving averages, definitely, yes.
They are a good form of moving, but that makes them more market adaptive. So that's why we like to use moving averages.
Yeah, so it's basically the same concept. Yeah, exactly.
Yeah. Wow, we have had a record amount of questions tonight, guys. I have been inundated,
which is questions at that time. We tried.
Awesome, guys. We're so happy with everybody's input. We're really sorry if there were questions that we couldn't get to, but I've literally answered, I reckon, about 150. So if you have any more questions that we have missed tonight, don't forget the webinars are running every week. Pepperstone are putting on these webinars every week at the moment, every Wednesday night at the same time. So we really look forward to, hopefully seeing you all there. Like I said, our webinar is starting in 15 minutes. So anyone who would like to join us, the link was in the chat window. So feel free to jump in on that one, and you can ask some questions in that one as well. But if we haven't missed any of your questions tonight, save them up for next week, or please post them to Pepperstone, and they can pass them on to us. So we'll endeavour to cover them, or at least cover the topics in the up and coming webinars, because we're going to keep obviously moving forward, checking out the live markets to try and help you guys out as much as we can to give you the confidence to actually start scalping in these fantastic scalping environments. That's what the market really is providing to us at the moment. So thank you so much for joining us, and we hope to see you either in the next 15 minutes or next Wednesday night.
So many questions coming in about how to use stochastic and MACD. We'll set a topic up for it, okay? Because there's quite a lot of interest here. So absolutely, thank you very much for coming. We will see you next week, or we'll see you in about 15 minutes. And we really appreciate everyone's feedback. So if you're enjoying what's happening, tell Pepperstone. We'll do more of these. So make sure you let them know with your voice that you enjoy what we're doing, because we do love this. We love trading. We love educating people as well, because we do know that this is the ultimate side hustle, or the ultimate trading kind of business for you. So we understand that everyone has an interest in this. Obviously money does make the money go around, world go round, and we'd love to continue doing this. We've been doing it for many years now. So all right, we will see you very soon. Ty, can you just pop that link in for everybody right now?
I will, yes, I'll pop it in the window again. So just click on the link and you can jump in on the next one, which is fine. I'll pop that in now, so hopefully everybody can see that. And thanks again, and we will see you shortly.
Yeah, and in regards to when people are talking, look for the live stream links. Okay, just search the person. You'll find it on the internet. You can watch Pal talk. You can watch everyone talk. Okay. All right, see you, everybody. Bye.